The two big economic powerhouses within the Eurozone, Germany and France, uniting, proposing this 500 billion euro rescue fund, to try and help prop up those economies within the Eurozone, within the bloc that have been very much hard hit, unfortunately, by the impacts of COVID-19 crippling the economies, as I say. Now, there's a big division anyway between the north and the south. Okay, your likes of Italy and Spain being very much hard hit in comparison to, the gradual recovery we're starting to see with the likes of Germany, France, Holland, all the larger nations anyway. So they're these smaller economies that are very much reliant on this, some funds, these grants, which they're going to be potentially giving to the most neediest of countries right now in terms of them taking a hit economically to try and prop them up. Now, why is this significant? Because Germany have always been, had this very hard stance, about, collective funding. At the end of the day, they are the powerhouse of the Eurozone. They feel like, why should we bail out everyone all the time? Why should we put out the most money? Well, Germany, unfortunately for you, or fortunately, you are the biggest nation within the Eurozone. You have the most funds available. Yes, you've been able to keep your economy strong and stable. But look, as you being part of the Eurozone, you need to basically, and how much you're invested into the Eurozone, you've got to do something. You can't just let it falter, right? Otherwise, you've got all this investment in the Eurozone for nothing and you lose a lot of money and it will cripple your economy as well. So it backfires. So they have every right, every reason to invest in this Euro Rescue Fund, this European Rescue Fund. So it's a big step in the right direction. Obviously, we had a lot of instability earlier this month with that German court ruling on ECB stimulus, which was showing there's a lot of political tension between obviously Germany and the rest of the Eurozone. But this eases and calms concerns for the time being. So what are we seeing in the market anyway, Ken? Cut to the chase. We're seeing a decent bit of buying pressure for the euro. Not just on this fact, it helps, okay? It isn't the catalyst, but it helps for every reason I noted. But it will also being supported by the risk appetite tone that we have in the market so far this week. Risk on trading, dollar weakness as a fact too. There's, some vaccine progress, early stages of vaccine progress from a US drug company. US and China concerns are still there, but it's a lot of rhetoric at the moment. More actual action takes place, then until that happens, we'll continue to see risk appetite. When and if that happens, then tones could start changing. But for the time being, euro buoyant anyway as we head back towards that psychological 110 mark. Baby, that's pretty much it. Do not hesitate to check out freaknetwork.io. Go on the Become a Member. Check it out. We've got a video summary of what we provide you every day. Fundamental and technical analysis and trade ideas. It's lit. We also got a fundamental course to think like me and think like us fundamentally. Other than that, stay lit. Let's get it.